Hi everyone, welcome to the prop trade, and it's our Thursday daily video. We're going to look at the open trades around the US Open in markets, cash markets open in the US in about half an hour. DAX has been trading nicely this morning, all the way down. This chart here to the left of me, right of me, you're looking at me, is the gold market, the key 5,000 level here, the purple line here, and we've troubled to hold it this morning. 10 o'clock we went under it. We've been under 5,000 ever since. Moving lower earlier in the European session, got as low as 4,972 a few minutes ago, and then rallied quite strongly. Looked like we were heading back to 5k just literally 10 minutes ago, and then we sold off again here as the hour has rolled around. So 2 o'clock London time. That's what's that? That's 11 o'clock. 11 o'clock now. What was it? 14 less 5 is in the US. So US markets, say, still half an hour before they're open. So 9 o'clock New York. Gold's moved down quite substantially there in that 5-minute chart. So that is that would have been a short there. It's already smashed through the bottom of the Bollinger Band there on the midline on this strategy here at on that first candle. So that's short there. Confirmed there. You can see the cross of the K and the D line on our stochastics. Remember the stochastics on this setup. They're set at 10, 6, and 3. You can't actually see that. My head's too big. There we go. So 10, 6, and 3. You can see that now, hopefully, down here. Just ignore the MACD. The MACD's attached itself as great indicator. We don't use it on this particular strategy. So remember, we touch in the outside of the Bollinger Band, and then we're looking to mean revert, so we're looking to revert to the average. That's what mean reversion means. So we get too stretched away from the average and come back to the mean at some point, and that's what the Bollinger Bands give you. Remember this standard setup with our Bollinger Bands, 2 standard deviations from the average. The average being John Bonnet 20 periods count back. So here on the 5-minute chart on the gold market, each candle is 5 minutes on this one, and we count back 20 to give you the average price over that 20, and that gives you the orange line in the middle of the Bollinger Band. The blue line to the top of the Bollinger Band is 2 standard deviations. If you don't know what standard deviations are, look it up in your statistics class. It means it's just how much averages vary from the average, and it's something, bell curve, normal distribution. So anyway, that's the upper deviation. The bottom deviation is the opposite, but negatively. So 2 standard deviations away from the average. And that's what the bottom of the Bollinger Band gives. So what we use this strategy for, or how we use this strategy, we wait for a touch of one of the outer limits. So the last touch of the outer limit, you can see it's going quite a lot here on the way up. So the last touch on the upside was here at 13:30. And then we've gone for another 5, 10, 15, 20, 25 minutes, and then all of a sudden we reversed really aggressively before we got the cross. And the second indicator of using this strategy of the K and the D line here on our fast stochastic settings. There we are. So this is the settings on our K and D line. So our percentage K line is our blue line here. It's above the orange line here. So as the price is moving up, it then crosses the percentage D, the orange line here, on this big candle here, obviously. So we get short here, and down we move. Typically with this strategy, we use the midline of the Bollinger Band as target 1 and target 2 at the second half of the Bollinger Band. Here, because we've not got until here. Cross. Target 1 would be there, so we would have got in. So this would have triggered. I'm sorry, I've not brought that up. I'll show you the settings. Because it's a bit different to normal. 10, 6, and 3. So the on our stochastics, our overbought and oversold areas, either limits, are still as standard as come out of the box. That's 80% and 20%, or 80 and 20 of the 100 range. This oscillator, this stochastic, oscillates between 0 and 100. So anything over 100 is price has got 2 extended, got 2, we call it overbought, and anything under 20 is it's got too cheap or it's got too it's gone down too far, so it's going to revert back to the middle. Some people put the 50 on as well as a midline, and add as these lines move through the 50, add to their position either long or short. But that's how it's set up. So the inputs here. So the K is 10. The smoothing, sorry, the K length is 10. The smoothing on is 6, and the D without shear, again, comes out standard, tends to be 14, 3, and 3, or 5 and 3. But 10, 6, and 3 are just sort of reduce the length, enhance the smoothing, and leave the smoothing for the D line, the blue line here has 3, so the one that moves less sees it doesn't get extended. Okay, so that's the setting, and as I say, thanks to Trevor Neal for that. First introduced me to that many years ago, but it's quite effective mean reverting strategy, this one. So there we go. So we've got in here, or this strategy would have got in here. How to trade this. What we're doing with the stocks in a minute. The stock market is still some 15 minutes before, so we got in there. Target one would have been here. Stop loss would have been all the way up there, unfortunately, because of the size of the body of the candle, or even if you want to be more comfortable with the wick of the previous candle, but it's a massive old candle on the 5-minute time frame, so you can bounce back quite quickly. But we've got to target one, so which was there, so we'd have closed typically. Purple because it's the target, green because it's green to go. So that's our entry there at 4,985. We got out initially at 4,975, so $10. Take the spread off, so at least $8. That's a big old move, isn't it, on gold markets? Just following this very simple strategy, and it's still short. Why do I know it's still short? I don't know it's still short. It obviously could bounce back up here anywhere. It could continue to plummet. But as far as my stochastic, my second indicator is concerned, we're still moving down. My first caveat that this might bounce back is the fact we've already touched the outside of the volume band. We've had some pretty hefty wicks over the last hour or so. See it come back to 11 o'clock this morning. So quite a lot of interest and volatility in the gold market. Remember, the Asian markets are closed. The Chinese market is in particular closed. It's late in the evening there. I know a lot of my colleagues in India are watching today, so welcome everyone. If you've got anything you want to have a look at in particular, again, let me know. Stick it in the chat box, and we'll have a look at it together. But that's short. So my stop loss now probably pulled all the way down to entry. As I said, let's do it. We'll come back to it and see what happens. So that's red for stop loss. So there we are. So red for stop loss, green for go. Purple T, well, we've hit that, so we've closed 50%. I'll now move the stop loss to a little bit below, stake out the spread, a little bit below our entry, so we're guaranteed a reversal of, guaranteed, but a reversal of the price to there will, at least give that a little bit of a few cents on the second half of the trade. That's how I do it. Some people do it, take 80% of the target one, or just 30%. And then add to it if the trend is moving. But obviously this is a mean reverse actually. We're looking for it to go up and down. If we look to the higher time frame, what's gold been doing this morning? So we take the hourly time frame. Gold was bid yesterday on the worry, general bid for both oil and gold. Gold being a safe haven asset given the ructions we've seen, and no progress in the US and Iranian talks in Oman, although both sides were talking it up quite positively. The carriers are still in the Gulf, or heading to the Gulf, the second carrier, the US carrier that is, and the Iranians are still squeezing Strait Hormuz. So rhetoric is being waved on both sides. The Americans want the Iranian ballistic missiles to be included in these talks. The Iranians said no, it's only going to be nuclear weapons. Obviously, Netanyahu's been to Washington to defend Trump's ear directly, so see what happens. Obviously, neither party, the Iranians or the Americans, are afraid of a fight. Unfortunately, it's the poor people, citizens, that suffer the most. But so we had that bid on gold, and we had similarly moved on oil yesterday. We went up, as I said this morning, we couldn't hold the break at 5,000. We went over it yesterday. This morning we were over 5,000. We'll come back down on it. So we're here on the hourly chart, we're under 5,000. So that's an upside cap, and we're in the under half of the Bollinger Band here on the hourly chart. So for the last 1, 2, 3, 4, 5 hours of current candles forming, we've been in the under half. So we're sort of partially negative. So we're looking for short positions, perhaps to the downside. The bottom of the 1 hour Bollinger Band sits there at 4,958. So if we just go back to our 5-minute platform, so this 5-minute was in line with the higher time frame trend. This is still negative, but as we can see, we have bounced back quite significantly. You say, well, why have we bounced back? Well, we might have got to the key level, 4,972. If we go to our hourly time frame, it's not particularly key level where we've gone down to. I would have said this level there a bit further, a bit lower at 4,965, perhaps here, the one with these candles here, and probably the low from yesterday, or the pivot, or the opening salvos yesterday at 4,962, which also is the bottom of the Bollinger Band. So that's a key level, certainly 4,960, 4,960, and then that candle there, bottom of that candle there, there would be a pivot area at 4,968. Okay. Other way of doing it is just to concentrate on what's going on today. So if we go back to 5-minute time frame and zoom in, what's happened today? So today started back here. So we put on our low of the day, which is over here this morning at 4,965. I don't know the figures we go, but 4,961. Let's do that. So that's our low of the day. We'll change that to gold. So that's our. Put that up to 10. So that's the on day low. The reason we do this is to see. So it's low of the day. You can see that. So that's our low of the day. And our high of the day, similar range. That's our high of the day. That occurred in the European session this morning, 9 o'clock. So that's our high of the day. We've rejected that, haven't we, all day? So that's our high of the day. So that's our high of the day at $5,022 or $5,021.22 round numbers. And obviously the key thing, the hugely psychological number, the big fat round number, is mathematical problems one. It's a great handle, my friend. Anchor on this side. Okay. What do you mean, friend? Is that we're under 5,000 and we're in the under half. As I said, we're in the under half of this Bollinger Band for most of today. We had a spike out there for 5, 10, 15, 20, 25, 30, 35 minutes. Out we went into the upper half, and now we're back down. So we're back with the trend, we're back with the hourly trend, but we've bounced so far. So as I said, our stop loss is here. We might get stopped out on the second half, but we've bagged 15% of that move. So $10 move, we take $5 that we've put in our profit or in our table. Our stochastics lines are still moving down. There's still a nice distance between. That's what we want to look for. They're not getting close. This might be just might be a capitulation low here because it was similar to the one we had here at 113, close to the just a bit lower than the one we had at 1 o'clock, which was lower than the one we had at 11:50 and lower than the one we had at 11:15. So you can see these lows here are actually getting lower, aren't they? So, and the one we just did here was even lower again. So you can see that 1, 2, 3, 4, 5. They're all 6, 7, 8. They're all getting lower, aren't they? So the pressure, even in this 5-minute time frame, is to the downside. Hello, my friend. Anything you trade? Anything you want me to show you? Any strategy you use, or anything you want? Any of my strategies you want to explain? Please let me know. Where are you in the world? You don't tell me. You don't want to. I understand that. But hope you're making making money, and I hope you're making money with prop trade. We're here, all of us are here to help. So anyway, we'll come back to that. So let's just have a quick look at what's been going on today. This is something we always do in these sessions. So I've got a very calendar's not working for me, so I've got investing.com. Bear with me a second. So, where are we? We found that was yesterday. Philly Fed yesterday was better. Bowman, Michelle Bowman, she's Deputy Governor of Compliance. So, so the main news this morning, obviously the Asian markets are closed on China. And the main news this morning was a better than expected jobs numbers out of Australia. Employment change. Unemployment came down to 4.1%, and the the other bit of news, the key news this morning has been this one here, in jobs claims coming in at 206,000. This is initial weekly claims. So this is the people that claim unemployment benefit for the first time in as new unemployment claims, and it's only 206,000. It was expected to be 223,000, and last week it was 229,000. Overall, historically, these are just numbers. If you don't follow them, I follow them all the time, obviously. But the um, um, key thing is it's still showing a relatively tight jobs market. But when you drill down into those numbers, my friend, mathematical problems. Handle yours. Thank you, my friend. It's just watching the markets. I get quite noodly about these sort of things. And there's another thing called the 4 weekly average, and there's the continuing claims. Those people that have been out of work for over 4 weeks and claiming, that is still looking relatively tight. However, when you drill down into the numbers, and the head of the ADP, the private payrolls company, was just being interviewed on Bloomberg, and she was saying, which you all know, but she's confirmed it. Most of the jobs are in the healthcare sector. So, and they're getting feedback from their people that they interview and consult about the stagnant nature of the jobs market. So things are getting a bit twitchy. There's not the spread of jobs, and it's really, the healthcare sector, which is basically, nurses and cleaners and care people looking after elderly people. Again, it's all part of what's happening in many developed economies. That's growing, but areas and construction's growing as well, given this data center boom and rollout that Trump has initiated. But really, it's the healthcare that's dominating. There's a bit of pickup in leisure and hospitality as well, but basically, it's healthcare and leisure and hospitality. The problem with those sectors is, with all due respect, they're not particularly well paid. So, and the number of people changing from one job to another, the temptation to move from job to another is diminishing. And the reason, but people that are moving for less money, because most people, when they swap job, tend to get a pay rise or better conditions or whatever it is, combination of work from home or remote working and working in the office. But from a numbers point of view, the premium is the lowest they've ever recorded, is what she said, and that caught my attention. So the ADP, the private payrolls company, the company that does a lot of payroll for big companies as well as small companies as well, are saying that people are moving for the least amount of incentive when it comes to getting extra pay. So 1.9% extra pay is all people are getting when they're moving from one job to another. So those that are shifting from or switching from one job to another, whereas people are tending to hang on in employment as well. So I thought it was a really interesting comment. Typically, 5 to 10% increase in people's wages is what's normally true. I think went over 10% just after COVID, when the demand for labour went through sky high for all that big layoff during the COVID sector. But 1.9% is a premium that the average premium people are prepared to accept to move jobs. So claims remain tight. The other big headline was this massive negativity, the trade balance. A lot of that apparently was to do with the amount of gold, physical gold, leaving the United States. A lot of gold arrived, a lot of gold left. There was all that issue around, which is home to many gold bars and gold being part of the tariff deals with Switzerland and the United States. But the gold numbers for December have skewed these trade balance numbers. But certainly the president won't be happy with a negative trade policy deficit on trade balances. What came in said he would fit. So a massive 70 billion trade balance for December compared to 55 billion everyone was expecting. So that's going to get up the president's nose and so on. So that's the main news of the day. Also, we've had the Philly Fed numbers, manufacturing. Sorry, where are we? Business numbers. 55 manufacturing, that was better than expected, 16.3 compared to 12 last month and 7.2. So that is better. So perhaps there are signs of manufacturing rise. Remember, we had that 5,000 rise in the non-farm payroll manufacturing sector from last week. So anyway, we can come back to this because this is old data. This is already in. This is getting priced into what's going on at the moment. Let's have a look at our chart and what's going on. Come out of the way, Mr. Calendar. So what happened there? We're still short this one. Stop loss is here. I might want to pull it down a wee bit. Pull it down just above the width of that up candle there as we go into the open. Now then, the issue about obviously having positions open going into the open. We're at 14.29 now, so there's a minute to go. Obviously, you can't take any new positions if you're using a standard account 5 minutes before or 5 minutes after. But if you had a position open like we did here from where was this? From 2 o'clock. That doesn't matter. Obviously, the issue about the open is the sort of increased volatility, even on something like the gold market, which is trading the derivative market, and the actual live cash trading of gold is limited to the COMEX market, the bullion market in different parts of the world, here in London as well. But it does still impact the cash open of the stock markets, and that's what we're doing. So there we go. It's gone our way, hasn't it? Here, as the open kicks in, gold moving down, or not necessarily moving down, but more activity there. You can see on the gold chart there. So as we move down, so let's just flip to the indices, which is what we normally look to trade. Dow, particularly the Nasdaq, just concentrating on the Dow today. So that was our pre-market high on the Dow this morning. It's our pre-market low. Here's the opening trades. I'm tempted to actually try and catch the open. So again, we're biased to the downside. Now remember, this is the 5-minute chart. You can see that's the high. That's the lower today. We're at the lower end of that section, aren't we? This is the range of the day so far. I've got a little fib chart on it to see if we're going to get up to where we stalled. There's 50% of the day. We haven't quite recovered that, and then we've moved back down. We're under the 23.6 level, and this is the opening volume here, and the opening volatility, which is fairly typical. It's a Thursday. Thursdays tend to be higher volume. Let's put the volume on. We have a big volume there at 12 o'clock. Big volume there at 10. And a big volume there at 8 o'clock on the European market. I've got it's been trending nicely down. We've got a lot of pips this morning trading now on the futures market. Let's calm this down. Here you can see using this strategy, we had another touch of the outside of the Bollinger Band there at 410, and we've got a clean entry there, but at 425. So you could have just jumped in there if you wanted to get um, technically it went long, but look, your stop loss would have been down here at the least, and the volatility of the open has taken that out to that long. So it's very much against the trend. So if we're going to see how this pans out on the open, our stop loss now is that point somewhere looking to get short on that one again. It's the trend the trend reversing strategy. Just go flip quickly as the opening trades are going through to our trend following strategy. So crossing EMA on the MACD start, crossing EMA. So this was short nicely all the way down here. Came there, it was closed out. It's got above the mid contract. Actually went long there, but then reversed there at 12 o'clock on this 5-minute time frame. This is the opening. So again, this is biased to the downside. I'm not sure what that line is there on this chart. That purple line. You can see when I open that makes so much, but you can see that we're still biased. Just over the other one. Go at the beginning of the day. There's our high. Here's our low. We're pushing new lows of the day. There's that level. Interesting. There we are. See that? That's whenever that was from. That was from yesterday's open, and we touched that. This is 18th February. See that 14.35 from here, and we're testing that. So again, we're biased to the downside. So we look to take short positions on this one. So big old volume. Big old volatility candle there as the opening trade for Thursday, the 19th of February goes through. So let's see if that calms down a wee bit. We got some, the DAX this morning was very rock and roll. I was going to get up to trade it, but thankfully I missed the opening 8 o'clock hiatus this morning on the DAX open. So it was all over the place, and I managed to catch this downtrend, and I got chopped out as we were up and down a bit. So I'm actually down on the day, I think. Yeah, I'm down 26 points at the moment, and I was all on DAX this morning, having done very well to start chopping out of this. So I was chopping around too much. But again, you can see DAX in Europe is still biased to the downside. We actually took a trade here before we came on. I forgot to mention that on our crossing, this one, the bond trend structure on the 5-minute ahead of the open. So there's target one, and it's coming back against us. So my stop loss was down here, and I moved it because I was talking to you guys. So that's going to get stopped out, isn't it? As a losing trade. So it looks like leave it for now. But there's the entry. Target one for this one really would have been the upside if that had completed. We got up there, but I'd have got out there. See what's happened there? So if I'm watching this, which I should have done, and when this is programmed, this is what the program does. Once we get a clear cut touch again, so we've got to the, so we've got in here. It's moved up for a couple here at 13, and then it's come back down. Still looks quite positive because we're still up here, but then we took the orange and the blue touched here, but we haven't confirmed that it's going to roll over, and it has rolled over there. And obviously now it's just taking my stop loss out as well. But we'd have got out here as the stochastics have touched, and we've got some light between the two again there. So that was a valid entry because we touched the outside of the Bollinger Band there. We've got the touch there. That's the entry here. First target was up here. In fact, we didn't get into the next one, did we? No, it was that one before we got in there, 35. A little bit of profit, and then it's gone back and stopped that. So it's actually a losing see, what we do is we would have taken it there, tracked that up, pulled that stop loss up to the bottom of that candle, and then but we've got a touch here. Next 5 minutes we went down initially, but then went up, and then the following candle, this one here, it's 14.15. We've got a clear division between the K and the D line, so we would have stopped out there instead of stopping out there. So that would have been a flat trade, but we didn't get into that one, did we? So absolutely flat trade if we'd been managing this properly, managing like we would have been doing those trading that. Other than that, we've reverted to type, we've reverted to trend, so it's, looking to take short trades. And I mean, some people would then have applied a very small risk on that one because it hasn't gone into the overbought area. We have started to move down, but we haven't had a touch of the outside of the volume band. Now we have, and this might be looking to buy, but the trend, remember, is to the downside. So it's more of a trending market than a mean reverting market at the moment. So this is down with trend. So if we look at a trending setup, we open say our Heikin-Ashi candles. We talked about this a lot on early on Monday, didn't we? We did our Heikin-Ashi workshop. See here on DAX. Yeah, it was the DAX, wasn't it? We were talking about the trade today. See here, it's just completely red. So this is one of the real beauties of the Heikin-Ashi candle. It keeps you clean. So here on the hourly time frame, where it's just short, you want to take it short, you want to be adding to your short during the day. Come down to our trading 5-minute time, it's a bit more choppy, but again, the predominance is still to the downside. The bigger candles are the red bodied candles, which are bigger than the green bodied candles, and they're negative. So nice, this is the trend I was talking about earlier this morning. Nice strong trend to the downside. We had lots of volatility around the 8 o'clock open. We moved up, and then we moved down, and we've been moving down here ever since. So big negative start. So that tick up we took here, was all well and good because that was in line with the Heikin-Ashi candle as well. But then we got out here at the red candle at 8, or I said 8:55. I meant 2:55. This is US time for some reason on this feed. That's why I said it's at 9:30. So this is clearly big short, or sort of big short on this candle there as the open kicked in at 9:30 on this time, 2:30 our time here in London. So and we've been all the way down here, so that's still short. So that's keeping you the right side. It's clarity, not the choppiness we get. So we are still at higher time, but it's very much biased to the downside on the DAX and the Dow today. Just go back to the Dow. Similar movement here, so a bit of a tick up here, and then a big move down, negative candle on open, and then moving lower here. Down. Get rid of the hourly chart on the Dow, quite negative. Then we do the range of the day, see where we're going to get to. So let's just go back to so continuing to move lower, we've got new lows today. So this is our pre-market low here. So that's our pre-market low, but our real market low is now lower. So the low market low is here so far. So that's always significant. It's lower than the pre-market, so it gets more weakness. So be careful trying to buy that because the pressure is to the downside. It may reverse, but as you can see on the stacker, on our stochastic, it's very flat here, so it's too early to try and call this to move higher as we've opened, as we've just opened in the last 10 minutes or so. Okay, so that's short as well. Elsewhere, Bitcoin still suffering 66,000. Daily chart that we drew our lines on this. Now that's our, as we talked about lines yesterday, weren't we? These are our trend lines from the low of 60,000 last week before last, and the six that was punctured this week in the Taiwan, even the body to body, to wicks from earlier yesterday. We went through it and we're under it today. So this is suggesting more weakness. And as we said yesterday, 65 looks more likely than 70 on the snip at the moment. Those little triangles were continuing to move down. There's that big leg down. We couldn't get and hold, sustain the first fib level, which is below the key 70,000. And so we bounced quickly, then retraced, bounced, and then retraced. So break under 65,000 takes us down to 60 quite quickly. But we have been consolidating since the first big sell-off. So above 65 proved support, but these trend lines are breaking down again, aren't they? To the downside. So we're arcing down all-time highs of 65,000 last week. We couldn't, even then, we couldn't break the 70,000. As I said yesterday, we've got this big level, we've got the round number at 70,000, and we've got the key 20-day movement as well. So Bitcoin remains under pressure technically and chart. Energies, as I said yesterday, bid on the no progress really from the both the Iranian and US discussions in Oman, and also the harder rhetoric the US is saying around Ukraine as well. So 66.70 now. Gold or WTI today through the 65 level again yesterday. Very, very strong day yesterday. 2-3% move, 2% move yesterday, and we're up another percent and a bit today. So back in the upper half of the Bollinger Band yesterday from that brief spike down on Tuesday, and back to 65. And they were very strong recent highs. You see them going back to the summer here. These are just intraday moves, but July we did get to $70 again, so are we going to get there in this move up? Obviously, it could all come to breaking quite quickly. President Trump, you can't hear me, Matt. Good afternoon, Matt. Can you hear me now? Is that better? Let's check the audio. Oh, right, hang on, no, the wrong headset's. Can you hear me now, my friend? Matt, hope you can. Hope you can hear me now. I've switched on a different microphone. It was the wrong headset, actually. I don't know why. Good afternoon, Matt. Hope you can. So, as I was saying, gold and oil particularly bid yesterday on both the Russian and Ukrainian tensions, and missiles still flying about, drones still flying about, no progress there. Particularly, thank you, Matt. And particularly, obviously, the stalling of or the ending of the Iranian-US talks, and the Strait of Hormuz still squeezed by the Iranians, and that second carrier moving into the Gulf. As I was just saying now, I realised my microphone wasn't working properly. Trump has his State of the Union speech next Tuesday. So again, whether he's going to want to announce a big political announcement or a strike on Iran, then that's what the markets are getting a bit twitchy about. Hence this rally we've seen in gold and oil. Does he want to do that? Does he want to play that hand? We'll see. Obviously, Iran is a very different beast to Venezuela, even though they're very, very infrastructure is badly hit by the US and the Israelis. Obviously, I was saying Netanyahu was there again last week, pressuring him to try and ramp up the pressure on their ballistic, the Iranians' ballistic arsenal, as well as just the nuclear. The Iranians weren't going to talk about that, but and how well endowed they are. I mean, it didn't really do much damage to Israel, did it? So yeah, they're on the back foot, and the Iranians are wanting to talk. So we'll see. We'll see how it goes. But he has talked about possibilities of. Well, he hasn't ruled out possibilities of regime change. He's not the greatest of diplomat, is he, Trump? But it seems to be quite effective.
for his call, certainly politically. But is it wearing a bit thin? All this activity overseas, all this foreign policy, when people are still suffering quite badly from escalated prices. So, but yeah, time will tell. But yeah, Tuesday, key speech from him. Wednesday next week is the mighty Nvidia with their earnings, likely to beat expectations, but very, very, very highly valued. So let's have a look how we're doing. Where were we? I can't remember what we were doing now. We got stopped out, didn't we, on that DAX because I wasn't watching it. The Dow was, we didn't do anything. Did we do anything? No, it was the gold. We had a gold trade open, didn't we? Our gold position open. So it's our new this is our market low. We're back to our pre-market low. So we're chopping about a bit. That's not doing anything really from this mean reverting point of view. So let me just go back to what we were, gold. Let's have a look at that gold position, see what's happened there as the open's taken us out. What happened? We were short, weren't we? Hit target 1. There's our stop, and we were stopped out. So we've been stopped out. So we've had a cross here. So there we go. So right, let me talk you through this. So we were short from here, from this. We were still moving down. We moved down, hit target 1 at the blue line. We were still short. We pulled our stop loss down to the top of that wick head of the open. Here's the opening salvo. We went lower again. That's when we pulled our stop loss down. And the reversal of the open has took us out. So we've made that amount from the green to the blue on for 50%. And then we made from the green to the red on the other half of the trade. What the system would have done, though, would have on this candle here, would have sorry, not on this candle, on this candle here, the cross of the before that, 1410, we touched the outside, so we were looking to go long. Remember now, so that's one touch there, another touch there, and another touch there. And still at this point here, when we last touched the outside of the Bollinger Band at 230, as the market opens, we push prices lower. We pushing the low of the day at 4. We didn't get quite as low as we did before the market opened, so we went to 4963. The 5-minute buyback when we went from bottom here 4973 all the way to 4985. So a big candle, big engulfing candle, taken out the last 20 minutes. So that's positive as well. We got a trigger to go long. So that would have been, so if that's a short position coming down, this is now a long position going up. And because it's at the Bollinger Band, our first target is the outside of the Bollinger Band. So that's entry. Stop loss this time would be again down the bottom of that candle, and our first target, is when we got in here would have been the top of the Bollinger Band, which would have been about there. And so again, I'm not making this up, but this is how that strategy works. So this is hit target 1. So again, 50% of that is now closed. Stop loss now, I'm doing this in real time because this is exactly what will be happening. Stop loss is now pulled up to our entry. You can see the stochastic lines are still moving up, still nicely aligned, still nice bit of fresh air between the two. So we're moving up. Are we going to get to this 80 level or not? We shall see. But I don't care because I've made half of my trade. And in fact, let's move it up a bit more to the bottom of that wick. If we're just going to trade this in 5-minute time frames and see what happens this time when we go away. And where did we stop? Not only did we stop at the top of the Bollinger Band, we stopped just shy of that 5,000 level. So at the moment, with the US cash market 20 minutes open, we don't want to go over 5,000, but that doesn't mean we won't for the rest of the day. So gold, again, because it's a big round number, there'll be lots of stops up there, lots of targets up there. And so this is working out quite nicely on our gold market. See, that's what mean reverting is. It goes from one extreme to the other. And you can see how the Bollinger Bands are widening, so the volatility is increasing. And that's what happens when you can look at the size of the body of the candles getting bigger. So the distance the price is traveling is further. So bingo, twice there. Okay, so we've had 2 successful trades there, one long and one short and one long so far since we came to you at 2 o'clock. Okay, on gold. Not so sure what happens on that DAX one. Obviously, got stopped out, but we'd have stopped out flat if we'd been trading it. Let's have a look at the Dow again. See if it's calmed down a wee bit. Now we're 20 minutes in. And we'll have a look at the Nasdaq as well. I don't like to trade the S&P 500 money wise, but that's still a bit messy for me. I'm not touching that at the moment. As we said, the buys remains to the downside. That was the pre-market distance we travelled? I can't remember. Yeah, that was the low, wasn't it? So is that what you did? That was. Yeah, that's the high and low of the day, isn't it? And we've already moved out of that, so that becomes a little irrelevant now. Let's get rid of that. That was the distance. We did a fib breakdown of the pre-market high and low, but we can see we've now made a new low of the day. So, and it's to the downside, and we're still in the under half of the Bollinger Band side. Be reluctant to try and take this long, even though our stochastics are still moving up here. It's flat, and again, I'm saying we don't use the MACD on this, but you can see the MACD is flattening, and the MACD signal lines are to downside. So we go back to the a trending strategy, which is perhaps our crossing strategy. So the other thing with me yesterday, I said I'd have an MT5 today. I've had problems trying to open. I'll set it up this morning, so I didn't have time to really spend fixing it. But I'll try and fix it for tomorrow. But today, you can see, even though the trending strategy is very messy, stay out of that. It's exactly what happened to me, or would have happened to me on the DAX open this morning at 8 o'clock. We got a mess, so just stay away. Find a direction and go up to the higher time frames. And if we do that, even a 15-minute, is it giving us a direction? Well, yes, it is. It's biased to the downside, but under the red 21 EMA on the 15-minute, and we bounced off this level, which for some reason I don't know why it's on here, but it's 49,450. It's a round number, but look at the volatility there on the open. So lots of volatility, quite interesting on that 15-minute opening candle, and we ended up where we started, a bit of a massive doji there on that 15-minute candle, but again, still under the 21 EMA here. So clearly, so far in the US session, there's been buys at 49,450. But are we going to test that again to the downside? Even our Heikin Ashi candles on our VWAP setup here will be mixed. In fact, they're not. So there we go. Oh, it's because it's the hourly. So the hourly, very red still. So you're still short. You look biased to the downside. Big move here earlier this morning, ahead of the UK Open, European Open. A bit of sorry, no, this is the European session because it's the times that's wrong here, isn't it? Oh, that's suddenly gone to. Oh no, it's 9 o'clock. It's New York time, isn't it? So, still red. We have got wicks to the north this time, but we're still bodied, getting bigger. Ironically, there's the volatility. So, a bit more choppy in the shorter time frames, but even the 15-minute will still be short, I'm guessing. It's ticked a bit green, and the 5-minute may have been a bit more choppy still. But relatively flat. But again, you see price action still sort of biased to the downside. So as our main mean reverting strategy on our Bollinger Bands and stochastic setup, I'm not touching that with a barge pole at the moment on the Dow on the 5-minute. So look at the Nasdaq, see if that's any different. No. It's a bit. Actually, I haven't said that. It's a bit more definite. A rejection of lower price, clearer flat floor there at 24,745. So that's a clearer move, and we got a clearer move here as well. You can see the Bollinger Bands going up. So the Nasdaq is providing a bit more clearer direction now that we've got into the full swing of the session. We are nearly half an hour in. We're coming to the top of the hour at 3 o'clock. Don't think there's any significant. There was So we've had that data which we talked about earlier, and 3 o'clock we got pending home sales that are about to drop, and Trump is due to speak later, but I think it's a purely political speech, isn't it? It's not an economic one. I think that's tomorrow's economic one. Due to speak about the economy at the Coosa Steel Corporation in Georgia. So he's speaking about the economy, and later my time at 2100. So I'll watch that as well. Obviously reiterating how well the US economy is doing, and how well the US steel industry is doing, no doubt. So that is a bit more positive, but literally just as we've come here, we've broken above this range here, and there was a bit of a floor there, a stronger floor there. I should have looked at this before, but again, it's it's not extreme. We're right in the middle of the stochastic, so it's maybe a weak move that might get faded, but that looks relatively interesting. So that's our low of the day pre-market, and then we went there. So that's a line worth sticking on, at least for today anyway, through here. And we've just broken out of that level as well. So do we add to that as it's pushing up? Come back to that one as well in a minute. So guys, if there's anything else you want to have a look at, let me know. Good afternoon, Matt. I don't know what you're trading. Let's have a quick flip back to gold, see if this move up. And I wonder if the Dow's done a similar move in the last 10 minutes that the Dow, the S&P has done. It's a Dow. It has, but I say the floor isn't as clean as it on the Dow as it was on the Nasdaq. But yes, trying to move up. But we're at there's our pre-market low, and that's our opening low. So we're sort of biased to the downside again. But not that far to the pre-market high, 49,700. But that's not anything I don't want to get too involved in. How's it impacted the DAX and the FTSE here in Europe? As we said, we were long and then we closed flat. That's continuing to move down. Have we found a floor here? Well, again, possibly. There's that 331. Bit of a floor through here. Yeah, again, I'd like to see that in the upper half of the Bollinger Band at least to move up. And this is just a first tick of positivity. Other layouts here on the MACD starts saying that's still negative on the hourly time frame. 5 minute might be a bit more, obviously a bit more choppy, but still negative as well. You can see the I'll reinstall the parabolic saw. Sorry, I'm just going to put the MACD back on because it was displaying a bit oddly. There we are. So sorry, what was I saying? Yeah, so the hourly was still clearly negative, and in fact the parabolic saw even on the 5 minute here on the DAX is still negative, regardless of all those wicks. So again, that would have been short really from that point there. Stop loss either up here at the parabolic saw. We scroll it down, but it's very choppy. It's not moved much since then, has it? So say that would have been the first on the open. You would have got in. You would have filled a bit later after the 5 minutes, and your stop loss. I get sort of through here, not just above these candles here. So we're still in that. That would still be short and still open, but it hasn't. It hasn't had the oomph or the volume to take it lower, has it, on the DAX there? And let's go back to our gold position. So we continue. We breached the 5,000. So that's a nice one there. On this one, as I say, we'd have got in there at 49992, and up we go. And scrolling our stop loss here. Keep it tight. So that's in the money as well. That parabolic start flip on the MACD. See this one again. So there's our cross there. on this candle here at 1440, and we're often running, trending, move it through the 5,000. We go to the, let me make a copy. I meant open our layout, go back to the Mac Bollinger Band stochastic, burst through the 5,000 again. So there we are. We're still moving higher. We were we got long here, didn't we? That's what we said. There's our target one. Our stop loss was here. We'll come back now. Let's pull our target up to. In fact, let's ram it in our target one. So short, long, both successful here on gold on the 5 minutes. And let's see where we go. High of the day, 5,021.85. And you can see that. Remember, this is the 5 minute chart. So these are sort of literally minutes. So really the candles, certainly on the 5 minutes, took us to 520. So really 520 is the upside target, isn't it? It's where the selling started this morning. The European session also started pre-European session, 7 o'clock again. So you see that. In fact, let me just put that in as at 520 for the sake of completeness, for the sake of round numberness. So we'll see if we can get there. There we are. Have we just been stopped out? Oh no, I can't remember if I pulled that up before. We've perhaps been stopped out on that as well. Got a bit too aggressive with our stop loss. So that's closed as well. Let's be honest. That one. Oh, maybe not. Maybe the spread might have just kept us shy of that. I can't tell when you haven't got a real position, have you? But I'll because I got a bit too aggressive. But there we are. So we're continuing to move higher. Will we get to 520? Don't be trading this, Matt, or mathematical problems if you're still here. Best of luck. So gold has worked out really nicely for us. Less so right in the indices. We just sat on our hands and not trading, guys. Although I told this a live trading session, a live trading workshop. Not trading if things don't look right or feel right or trigger your setup, the particular setup you're using. That's part of trading, by not jumping in, not having to trade every single time, not trade every single open. So there we are. The move up was what's my MACD on? Not MACD, my stochastics. Stocks. Stochastics gone off. Is this the right list? So there we are. What's going on there? It's suddenly reappeared again there. So get rid of that. I don't really want that. So it is ticking higher, but again, it's too messy for me to get involved in that on the Dow. But gold's played out for a change. It's normally the other way around as far as trading the open is concerned. So there we go. I've been here over an hour again. I always managed to hang around for too long, but there we go. I will see you tomorrow for the key. One of the we had yesterday. We had the FOMC minutes, which sort of confirmed what we already knew. Really, it was very much everybody was in alignment for what they did now, but there's clearly quite a split about what happens next. But nothing is going to really happen until Mr. Powell is no longer chair, and Mr. Walsh, assuming he gets confirmed at the hearings, becomes the new chair in May. So the June-July window is still very much in focus, and it's slipped again with the minutes. And yesterday, the data today is probably more likely to be a July move rather than the June move. But obviously, there's lots and lots of data could pull that back between now and then. And obviously, we were watching it on a daily basis. So you pays your money. It takes your choice, my friends. So let me just leave you with the gold market. We're coming back to 5,002, but we are holding it. So if we didn't get stopped out on that spike there, we're still in this one, but it's looking like our whole position now being taken out as we've come into our stop loss. So that's a big old move, though, isn't it? So we took half off at shy of 5,000 and $15 move. That's a lot of pips, isn't it, on the gold? Lots of potential profit. Obviously, it goes against you. You got to call this wrong if you are, long this and short this one. It can be very, very hurtful. But Again, instead, the other way to do this, as we've said before, instead of pulling the stop loss up, leave the stop loss a bit further away and wait for the indicators to touch or to cross. So this is still long. It's just the issue with waiting for that is you can give back a bit too much. So I was happy to put the stop loss up there at our first target level. It's that key 5,000 level. It's top of the Bollinger Band as it was when we've opened it. So we were successful going short on gold and then successful going long on gold. But both we saw that in the real time, didn't we? Both the second parts of those positions were both stopped out, but so we made money on both going down and then going up on the gold market there around the open of the US session. So thanks for your time. Tomorrow we've got key PCE price index data from I'll be live from 1:15, 1:30. The data comes out tomorrow. We've also got the advanced reading, which is the second reading of GDP. It's delayed because of the 22 days delayed because of the shutdown, and then we had another shutdown, didn't we? A couple of weeks ago. Let's close that. But the core PCE price index is the key one, and the advanced GDP price index is also key tomorrow. So quite an important day tomorrow. We've got Canadian retail sales as well. And then we got PMIs out of the United States. We've got PMIs from Europe earlier on in the day as well. So quite a busy day for a Friday tomorrow, kicking off with retail sales out of the United Kingdom and see what is Nibs, Mr. Trump, President Trump, I should give him his full title, as Donald J. Trump has got to say later on today. So plenty to finish the week off. February the 20th, February the 21st. 10 years on Saturday. 10 years on Saturday since a certain Mr. Boris Johnson decided he was going to break from the government of the time and join the Leave campaign. And Britain's gone downhill ever since, in my humble opinion. But anyway, we're drifting into politics again. So anyway, he's got a lot to answer for, Mr. Johnson. So anyway, story for another day. Take care, everyone. I'll see you tomorrow for the data out of the US again. Take care, stay safe, and hope your Ramadan has started well. Your Lunar New Year, if you're celebrating this week, having fun on that as well. So take care, everyone. See you soon.